All right, let's get a check on what's playing out in the global space now. What to expect this week first. We'll see the Fed watch continues this week. We have Fed Governor Stephen Byron. He's going to be speaking this week. We also have Fed Chair Jerome Powell. They're going to be speaking on the last meeting, what happened in the last meeting, and what to expect for the dot plot there. We're also looking out for PCE inflation data. That's the Fed's... that's the preferred gauge there of inflation. We're going to be checking out that data. Then we'll have some economic data coming out from Argentina. We'll have data that's showing, what's playing out with the economy. We know the president there, he's come up with some quite interesting policies when it comes to the economy. We'll get a check on what's playing out there. Then we'll have consumer sentiment from the Eurozone. Also from the biggest economy in Europe, that's Germany. We'll find out what's playing out there. All right, to some stories today now. Indian software stocks, they fell today after U.S. government sharply raised fees for the H-1B visa application, stoking concerns over higher costs and operational disruptions for the country's IT services sector. The Nifty IT index dropped nearly 3%, lagging broader markets, which were largely steady. Tech Mahindra led declines by falling more than 4%, while Tata Consultancy Services shares that dropped by 2.5%. Then we see the People's Bank of China. They've left the benchmark loan prime rate unchanged today as widely expected, leaving it at record lows as Beijing attempts to keep monetary policy loose and shore up growth. The PBOC left its one-year LPR at 3.0%, as expected, while the 5-year LPR was kept unchanged at 3.5%. Both rates remain at historical lows after several cuts since 2021. The LPR is based on considerations from 18 designated commercial banks and serves as a benchmark for lending rates, especially mortgages in China. And the UK economy is expected to face a challenging second half of 2025 with muted activity, rising inflation, and increasing unemployment. That's according to Barclays' latest economic outlook. Barclays forecasts real GDP growth of 1.2% in 2025 and 1.3% in 2026, with inflation expected to peak at 4.0% in September 2025. The bank anticipates CPI inflation will average 3.4% in 2025 before returning to 2.0% target by the second quarter of 2026. Despite robust activity data so far in 2025, including Q2 growth of 0.3% quarter-on-quarter, Barclays expects a slowdown in the second half of the year. Consumer confidence remains subdued, with the GfK consumer confidence indicator for September dropping 2 points to negative 19. And we see Asian stocks of Apple suppliers surged today on optimism surrounding demand for the new iPhone 17 model after Apple reportedly asked key suppliers to ramp up production following strong pre-orders. China's assembler, Lockshare Precision, and electronics maker Foxconn have been instructed to increase output of a standard iPhone 17 by at least 30%, with Lockshare asked to raise daily output by about 40%. That's according to information released over the weekend. And for other markets, now Bitcoin fell sharply today, easing from last week's one-month high as investors look past the Federal Reserve's interest rate cut and await more concrete cues on the U.S. economy. The world's largest cryptocurrency last traded at 2.5% lower at $112,843, retreating from last week's peak near $118,000. That's the strongest level since mid-August. The token ended largely unchanged last week as gains over the Fed cut optimism were offset by caution over future easing. Meanwhile, altcoins saw steeper declines today, with Ethereum plunging nearly 10%. I'll give you an update later on what's playing out